It doesn't matter if it's $500 or $5 million, we're going to work with them. And that was my moment of, I'm all in. For me, then it was, oh, that's my job. I build products and services for credit union members to invest. I love to help people, and it went into that mantra of people helping people. And now I get to do it in the industry that I love and help change people's lives.
Hey, everybody. Welcome back to The Connected Advisor. I'm your host, Kyle Van Pelt, co-founder and CEO of Milemarker. In today's episode, we have a great guest. This is Justin Steitz. He is the president of Copper Financial, which is a really interesting group serving credit unions specifically, but not just credit unions. And we're going to talk a lot about all of the nuances of that and how they're growing through that space and what that looks like. But they also have some really unique tactics and strategies for what they're doing to grow and market as they evolve. So I'm very excited to have Justin on the show. It's going to be a great episode. And Justin, thanks so much for taking the time out with us today.
Absolutely, Kyle. Thanks so much for having me.
Yeah. Well, welcome to the show. My first question for you, I'm actually going to just start right off the bat. One thing we found in the research that was really unique is that you all use philanthropy, it seems like, as a big spearhead for maybe marketing or growth or, opportunities into business. And I just wanted to open up with that. I love philanthropy. I'm on some nonprofit boards myself, all of those sort of things. But that just caught my eye, and I wanted to start with that topic. So take it away.
Copper Financial is 100% wholly owned by a credit union. And it goes along with that credit union mantra. We are very community focused about our members. They're not clients or customers in our space. They're members because they're owners of the entity in essence. And so with that, there is definitely a give back mentality of people helping people. The credit union is serving they're underserved, the underbanked a lot of the times. And it just goes along with that mantra of further giving back and helping people. And so, it's usually very much a community focused group of members in the credit union that you're serving. And then with that, it's heavily giving back. And we do that not only through various organizations in our community, but also a direct give back to our members. Community America Credit Union is our wholly owned parent. In the credit union space, there's not shareholders like you think of in the banking space. These are actually, each member has one share. And with that, then we take a portion of our profits every year and dividend back to our members. So there's the member give back. There's also then in the community of what matters. And a lot of that is financial literacy here in the Kansas City space.
Oh, that's really cool. I love that. I love that story. Thanks for sharing. So I ask everybody this question. This is not going to be any different, but I've found that everybody has a unique path to this space. Some might be more traditional, some may be less traditional, but I've found that everybody has a moment in their life that I call their money moment, which is what caused them to turn this into their career or get them into this space. So Justin, what is your money moment that caused you to want to make a career out of this?
So I joined Copper Financial, again, Community America Credit Union. I say it tongue-in-cheek, if you will, in terms of the organizational approach. I joined 10 and a half years ago. I will say it was probably after about a year. You have that kind of honeymoon phase and trying to figure out, what you're actually doing, what the organization's about. And I'll say about a year into it, I kind of had that moment, that aha. And really it was about speaking with my boss, who thankfully is still my boss today, of, really what we're doing in the wealth management space at a credit union. And when you think about that, all means all. In the credit union space, all means all. And it makes sense in the banking side of things, being the underbanked, but in the wealth management space, that's a really challenging thing to do. So if somebody's coming to you with $500 and they want to start investing, we've got to figure out how to do that. And as anybody in the space knows, there's not a lot of income or revenue being driven from a $500 account. And so I kind of was like seeing these transactions and looking at stuff and having that conversation with my boss, and finally kind of like, I felt like I had enough time under my belt to kind of question the business model a little bit of, growing up in the wealth management space and seeing revenue and other things from higher net worth individuals, like, are you sure we should really be opening these accounts? Like, are we going to survive and those things? And it was a quick, all means all. It doesn't matter if it's $500 or $5 million, we're going to work with them. And that was my moment of, I'm all in. Not to use the play on words, if you will, but I had never experienced that. I'd grown up in the wealth space of, it's always about the high net worth, and you're always chasing that and finding whatever that account size is, that account minimum. And here it's, there's days where we're going to work with people with tens of millions of dollars. And then there's other days that it's like, I've been working on budgeting through the credit union and I've gotten in a really good spot. Now I actually have emergency savings and now I'm ready to start investing. And for me, then it was, that's my job. I build products and services for credit union members to invest. That for me was, I love to help people, and it went into that mantra of people helping people. And now I get to do it in the industry that I love and help change people's lives.
That's really cool. I love to hear that. And I think that that's even tied to the first question that we asked a little bit. I appreciate you sharing that. And so, but that leads me to have to ask though, so all means all, I love that mission, right? But also as you're talking about, Copper is built to create investment programs for people like this and whatever. How do you do it? Right? What's different? I know you built this because there was a need for it. How are you making it work?
Putting a lot of time, energy, and effort and having a tremendous team is helping make that work. But the ultimate things is, technology is driving a huge portion of that, right? The wealth management space has seen that evolution. It's been crazy over the last 10 years of what technology has done. Think of all the fintech wealth techs, right? The Robinhood, the Betterment, SoFi, Stash, Webull, all of those types of firms, and what they have done and gone from pre-pandemic versus post-pandemic. It's crazy, the numbers that those institutions, those companies have added. And so for us, right, in the wealth management space at a credit union, it's kind of like the credit union banking space, right? I'm still the underdog in this, in the wealth management space, right? Because not only am I competing with the Edward Jones and the Merrill Lynch, et cetera, from a financial advisor standpoint in each community and credit union we serve, but now I'm competing against all of the fintechs. And I know that because one of the benefits of being owned by a credit union is I know where the ACH payments are going. I know how much money Robinhood and Betterment, SoFi and Stash and Webull is getting from Community America. And I can go to all of my credit union partners and say the same. And so it's been an evolution where in the credit union space, it was very much, hey, credit unions, you go partner with really, really big firms out there, the LPLs, the Raymond James Ameriprises, who work with financial institutions, both community banks and credit unions. You hire financial advisors and you stick them in a branch and you tell them to work with members. And that's what I came to originally here at Community America and Copper Financial. And we've been doing that. And it's been very successful because our members at the end of the day want to talk to somebody. But there's now the technology evolution. And so that digital investing, whether it's a robo or self-directed trading, is important. And our members want that. And it's a path, frankly, to how we can keep them as a member. And so we have built our own robo-advisor. We call it Guided Investing. We've launched it to Community America. We're launching it soon with all of our partner credit unions. And now we're in the midst of building out self-directed trading, and that'll be up in early 2025. It's for that part of, again, going back to building products and services for credit union members was, initially it was like, oh, okay, this is how everybody does it, right? We hire financial advisors and we do this. And now it's gone the next step further, and advisors are never going to leave us. When robo-advisors came out 10 years ago, it was like, oh my gosh, it's the end of financial advisors. That's not it. It won't ever be for us because, again, our members want to talk to somebody. And this is that building and getting them ready for transfer of wealth, et cetera.
That's really cool. as a quick aside, for those of you who can't see on video, Copper's logo is really unique because it's the periodic table symbol, which most of you probably know, but if you don't remember from high school, the periodic symbol for Copper is CU, which I can't help but point out is also short for credit union. Was that on purpose, or was that a very happy accident?
No, it was on purpose. And thanks for noticing that, Kyle, and pointing it out. I'll have to admit, I was always a math guy. I was never a science guy. And so when our marketing team brought this to me, it took me a little bit to figure out, what are we talking about? Copper. Why? Like, there's gold and silver in our space and everything else. And then it's like, oh yeah, now I remember it. And it's the space that we play in. It is that tip of the cap to the credit union space.
Yeah. So wait, you guys are building investment programs, for the credit union space. You're not just loading all of those up with a bunch of Copper ETFs or something along those lines?
No, but it's interesting. I've got some logo wear, and I'll wear it in the community, and they're like, oh, so how's Copper prices? And I'm like, yeah, it's not what I do, actually. So I have to explain that a few times, but
okay. I think it's very clever for the market that you're getting after. I think it's very clever. So I think one of the things I want to get at, and you're touching on this a little bit with some of the technology that you're launching, but I think credit unions have always historically been known for high service, for this wider net of type of customers and those types of things. But they've also been maybe historically slower to adopt digital technologies, especially behind some of the really large national banks, right? If you look at some of the online tools that most credit unions have, things like that. So is that one of the missions of what Copper is trying to do, is help bring better digital tools to the credit union partners you have? Or, why do you think credit unions have historically been a little bit behind the curve on digital adoption?
Yeah, it's a great question. I think it's splitting hairs a little bit in that question, Kyle. You're right. The end result has been that slow adoption, if you will. I don't think it's from the lack of wanting to. It's frankly the lack of resources. Credit unions are, again, it's a close-knit group. It's been an evolution. It's typically has been some more legacy, antiquated systems. They all realize as part of survival, though, that they have to be much more digital. And so, going to industry credit union conferences and being there and talking to various leaders and executives, they are all looking to find the right partners and do the right thing to continue to compete against the banks. It's just a lot of times the challenge is resources. So they're seeing that, wanting it, and we've been blessed at Community America to build our capital position in a very good way and have the resources. And for us, then it is that we talked earlier about in the credit union space is people helping people. Well, I think Copper's mission in the B2B space, if you will, is the same thing of I'm going to different credit unions saying, hey, let me help you. You're trying to do it all, but you may not have the time or resources, whether financially or people or technology. So let me help and bring that technology so that it's not 4,900 credit unions out there all trying to buy and spend money on trying to conquer and compete against the Robin Hoods of the world, if you will. It's no, I've built it. It's all ours. So let us help you bring that. And I think that's what credit unions are looking for, is the right partners.
That's awesome. So I want to dive a little bit deeper into the story of the investment programs for credit unions here as part of what Copper does. So, we've talked about the technology, the ability to compete there, and how you're helping on that stuff, about the story of credit unions. I'm curious about what the unique aspect of your investment programs for credit unions are. And forgive me for my ignorance here as I ask this, but why use something like Copper as opposed to using low-cost Vanguard ETFs or things along those lines, which I'm sure they have access to, or things like that? Like, what's the benefit or the uptick they get from using Copper, or where are you all different in that way?
Yeah, absolutely. I think going to that Vanguard model, if you will, is what I would say is, although maybe Vanguard isn't considered the same fintech, if you will, as a Robinhood or a Betterment, right? It's more of that self-service model, keep the fees and costs down, et cetera. And that's very worthwhile, and that's a starting point. And it's frankly why we built the Robo and why we're building self-directed trading, is because eventually that person that's working digitally with Vanguard, we'll stick with that example, right? At some point in time, if that's a credit union member that's working at Vanguard directly, they're going to want to talk to somebody. It's going to hit a point in time where there's a life event, change jobs, inherit money, have children, need 529 accounts. At some point, our members want to come and like, okay, like I was doing this, but now is when I need some help. And that's where I think our differentiator is we can be the entry point, not only digitally and get you to start investing, but then we have the financial advisors to grow and morph into. And it's a one-stop shop. You're not switching. You're not trying to transfer money from Vanguard to this firm to that firm, et cetera. And it's frankly why the fintechs out there are actually losing assets today. Don't get me wrong. The fintechs are killing it and they're still bringing in assets, right? So this is not a knock towards them, but they had that run post-pandemic of it was just add. And now that the dust has settled, if you will, they are seeing a lot of withdrawals and accounts closing. Well, those accounts are closing not because they're switching from Betterment to SoFi. They're pulling money out of the digital space and taking it to an advisor. And those fintechs don't have that setup. And so for us in our strategy, and again, I'm not saying what we're doing is the perfect example. In the credit union space, I do think it's the perfect example, though, of giving that best of both worlds of here's the digital piece, which is, again, maybe not all people can see this, contained in online banking, because we build everything in online banking, not a separate app. And so they see checking, savings, loans, and investments right there, right? And they trade right there. And then when they want to talk to an advisor at their branch, it's all right there.
This podcast is brought to you by Turncast. We make game-changing content for fintech and financial services companies. Learn more at turncast.com.
I think that's actually a trend just happening in wealth management across the board right now. I feel like I talk about this on almost every episode now, but it's that prevalent, which is for a while, people wanted to compete just by saying they were a fiduciary and a CFP. Like I'm a planner. I don't sell you commission products. Like I'm fee only, et cetera, et cetera. Well, then, DOL comes around, whatever that looks like. And now everybody has to be a fiduciary, which, good for the world. I think that's a good standard we should all live by. But all of a sudden, saying you're a fiduciary, being a CFP is no longer enough of a differentiator for you to win business. And so then what starts happening is everybody starts trying to figure out how to offer more services or have a more quote unquote holistic offering. And it is fascinating because even with that, as people add the tax services and they add the estate services and they add all these things, the banking component has always been a huge challenge. And one of the things we hear from a lot of people is, for better or for worse, I can't seem to get quality banking info into like our client portal or things like that. So they might have all their wealth info, but we can't get, they've got 5-7 checking accounts across, businesses. And then they just want one place to see everything. It seems to be a really unique, well-positioned thing for wealth management coming through the banking/credit union channel, that you can have everything in sort of one place and power it that way.
It is. And you're right. I think that movement, if you will, has been a kind of a perfect storm. Because you're right, it was that part that you were talking of, well, now everybody's a fiduciary, so what's my selling point, right? And so it was, hey, more services, other services, and banking has been there. Well, the perfect storm comes in, too, of this time where interest rates have been historically high compared to what they were 5 years ago, right? And so not only do you have, hey, I'm wanting to offer more services, and now I have these interest rates that are, 5 and 6 and 7% that they're offering. And, there was just a very large fintech the other day posted it of, hey, we're now offering 5.1% on any money balances that are sitting there. Well, we're not having to do that per se, right? Our members see all of their cash in a wealth management account and they can just move money back and forth. We don't have to have this extra additional thing because we're already offering it. And then in the credit union space, our advisors know that if they're talking to a member, and they need whatever, they're going to buy a new car, great. We'll raise the funds, we'll sell off some things, and then we just go tell the frontline staff at the branch, hey, the money's now in the account. We're journaling this over, right? And so it is a very unique position that we're in to be able to offer those services. And I think that the wealth management firms out there are starting to see that.
Yeah, I totally agree. I totally agree. I'm curious to hear your thoughts. I know it's maybe not an apples to apples comparison, but just a different angle on this. I think lots of people are enamored by private banking. Hey, do they get access to all of these special things or unique things or whatever if I go work at the private banking unit of a bank versus working with just another RIA? And I'm sure credit unions are a little bit different, but does having the banking relationship make lending easier? Does it make any of these other things easier? Or is it, do you find a competitive advantage there for working with wealth management through a bank?
Kyle, it's a great question. You don't historically see private banking in the credit union space. And I think some of that is because historically, the demographic of a credit union member in terms of their financial well-being fits in a bucket. And everybody, very general terms, fits in that bucket. It's been because credit unions were historically tied to a company. So it was a teacher's credit union, or it was a military one, or we were the old TWA Airlines, right? Well, all of the employees kind of make, in a general sense, about the same amount of money. So you didn't necessarily have to have that. What is changing, and I think we will see the evolution of this more and more in the credit union space, is private banking. Some from a competition status, because there are high net worth individuals that are now seeing what credit unions are doing and the growth that they're having. And oh, by the way, like you mentioned at the start of this call, the philanthropy involved, and they want to be a part of that. And it's like, well, why do I need to go to XYZ big bank? You can name them. And I don't know what they're doing with my money other than paying shareholders, or I can bring my money to credit union, who is a community base, and I mean something. And that's where I think that intersection is going to happen of, we think we already provide tremendous service and, we treat everyone the same, but is there going to be that demand of, hey, that's great, but I need a point person. I need a quarterback, because I'm doing this and I own these businesses. And so I not only have retail accounts, I also have commercial accounts with you. And then I have wealth management as well. And you haven't seen that because a lot of credit unions aren't offering all of those things either, right? Historically, credit unions are just about retail banking, and they do some commercial. That's usually because, Joe Smith or Sally Smith member, well, then they own their own business. And so then we're going to do their commercial. Whereas now credit unions are evolving and seeing the opportunity in the commercial space and taking more advantage. And so we get the business side of the accounts, and then they see the great service. And then, the president and the CFO and the COO and everybody else there wants to start moving their personal stuff. And so it'll be an evolution to see.
That's super cool, man. So I want to shift and talk about something a little bit different. So you have an incredible background in compliance, and I think you have a good perspective on compliance, but I want to talk about compliance coupled with the future stuff. So, one of the big conversations right now in the industry is around AI. There's lots of AI happening all over the industry, banking, wealth management, investment management, all of this stuff. But there also seems to be trepidation around, okay, how do we do this in a compliant way? How do we do this in a smart way? All of that sort of stuff. So not asking you to write regulations here or anything along those lines, but I just think you sit in a unique seat from your experience. And as you're building all of this digital stuff, I'd love to just hear your take on the benefits and the challenges of all of this AI hype happening in the industry.
That's a great question. I love it, actually. It's a challenge because the wealth management space is, as you know, so highly regulated between the SEC and FINRA, and then every state has their own regulator as well. It's a challenge because it's coming, and I think the regulators want to be a part of that and know it's coming. But I think the regulatory space has been rather reactionary over the years. And I don't think that's their intent. I don't think that they necessarily want to be, but there's time, resources, etc., of trying to keep up with the times, just like we are on the business side. And so they're hearing it, but they're also trying to develop policies, procedures, guidance, whatever you may call it, when something's evolving and they don't really know what it's going to look like. And so that presents the challenge. And the firms are sitting there, and I'm going to say it that, in that everybody has the best of intents, right? Some firms do better than others in that regards, but firms are wanting to be very compliant. We get the regulation. We know that there's going to be regulation. We just want the help because we have members or owners saying, hey, in the banking space, we're going to start using AI more. Well, it's a challenge for Copper or firms like a Copper because, okay, the member may interact with AI on the banking side through a call center or whatever, right? Or an online chat. Well, the member comes to do wealth management and they think the same thing's going to be there for them. The hard part is it's a different regulator. The credit union is regulated by the NCUA, and then I have the SEC, FINRA, and 50 states to work with. So I think it would be great of trying to have more open conversations. And I know the regulators work with some really, really big firms to have those conversations where the AI is going, but it is always a challenge for smaller firms because we're having to compete and do all the same things. And, we're a very progressive, forward-thinking credit union. And so we're talking about AI all the time here. And I'm sitting here in those meetings hearing that and thinking, okay, how are we going to do this on the wealth management side? And what are we going to do and what are we going to adopt? And then, oh, by the way, we have to capture all of that. We have to have a third party out there. And so then there's a challenge there of not only the regulatory side, but then the capturing of that, much like email was 20 years ago or 25 years ago. It's like, oh, we got to have some vendors to do that. Well, I think can those same vendors be there on the AI side of things?
Yeah, I think too. So, Milemarker is a data company and a wealth management technology, like integration company. And, one of the big questions that we're helping a lot of people answer is like, okay, well, where's my data going? What's happening with the data, right? It's one thing to get these data feeds and move them around or whatever, but mapping out what's happening. And I think that tends, at least from the side of the table we're on, is the conversation about all of this is like, hey, we're really excited about AI, but we don't want to send our data out to like these open large language models because then who knows what happens with it? How do we, but we're not big enough to try and like build our own large language model. How do we do all of this stuff? And how do we get our data right? And how do we protect it? And how can we be sure that it's not going all of these different places? So I'm also very excited about what's possible with AI in the space and everything like that. But I think, to your point, our industry always has this sort of catch-22 of we can be really excited about those, but people have to stop and ask the question of, well, how are we going to do this in a good way, in a protected way, and making sure that, it's all right. Versus if you just run like a, marketing agency or something for, small e-commerce stores, right? You just sure. go knock yourself out, try and test all kinds of things whenever you want. And hopefully it goes well.
Yeah. I think there's just going to be a lot of testing, if you will, that crawl, walk, run, which is how we're going to have to approach it. Again, it's just a challenge because in this day and age, we want everything right now and do everything right now. And it's hard to crawl, walk, run when everything's right now.
Yeah. Well said, man. So on that theory and topic of AI, I would love for you to get out your crystal ball. I know we've been talking about a lot of the cool things that are going on in your space, but get out your crystal ball. Let's look forward maybe 3 to 5 years. I know that's part of the job you have, sitting in the seat you have, is, where's the puck going, to use a cliche, not necessarily where it's at right now. Yep. But what do you think is going to happen? And, for the future of your industry, for the future of wealth management as a whole, like, what do you see happening and evolving?
I see a couple of things. I think from a wealth management side, the continued M&A side of things and consolidation, I'm really curious to see how much more of that continues. I think, frankly, there's going to still be a lot of it. I think we got through that pandemic, and I'd say from an M&A side of things, it's prevalent, it's going, and it's going to keep going because I think comes down to survival of the fittest. Unfortunately, with the amount of technology that's in the space, you got to spend money on technology and doing these things in order to compete, or frankly, a customer or a member is going to go somewhere else where they have that. I think it's going to be really interesting if the big firms just keep getting bigger and bigger. I think from an AI side of things, if you will, technology, in the credit union space, I think there's a tremendous amount that we can continue to do to tee up products and services, not just on the wealth management side, but for our members, because we have so much data. On the banking side, you get a real clear picture, if you will, of where people are spending money, where they're sending money, where they're saving money, and the opportunity for us to tee up products and services quicker and faster because of that data. We should be getting to a point where we already know the next step that a member is going to want to take. Hey, you've had that car loan with us for 3 or 4 years, and it's a 5-year loan. Well, are we teeing up, hey, do you know interest rates are this? We're offering these rates, or same in the mortgage space. We call it life plans at our organization. We're building out life plans. Every member gets it, and it evolves over time. It's not a stagnant thing. So hopefully you're getting a life plan when you're 18 and you have it all the way until you pass, right? But that life plan is going to evolve. What it looks like at 18 versus 25 versus 35, it's a difference. It changes, and we should be there and have enough data to be able to predict what they need next and how we can help them next. Again, whether that's in terms of an auto loan, a mortgage, a HELOC, wealth management. How do we know that they've had a kid, 529s, or starting up, those sorts of things, and MBTing that up for them.
Yeah, well said. I think that is one of the really unique opportunities and cool things that are coming down the pipe of that is you have all of that data available to you, whereas a lot of other people are trying to pull that type of data from all sorts of different places. How do you press that advantage is a great question. So Justin, we're going to move into the final segment of the show. I've loved the conversation so far. I've personally learned a ton about how credit unions work and what this looks like. So I think the audience is going to as well. But this segment, we call it the Milemarker Minute. It's a lightning round sort of series of fun questions, a little bit less industry related, get to know you a bit better. We try to get them answered all in about a minute or so, but I won't hold you to it. So okay. You think you're ready to fire away?
Let's do it.
Awesome, man. So as somebody who grew up in Kansas City, I would love for you to kind of describe the ideal itinerary for somebody visiting for the first time. Like where, give me three or four spots or something. Like what are the must-see places in Kansas City?
Well, first and foremost is barbecue. Kansas City is far and away the best barbecue. I know there's people in Tennessee and the Carolinas and Texas, but Kansas City is the home of barbecue. So you're going to be hitting a little Joe's KC or some Slaps, some local places here in Kansas City. So you get off that plane, go get some lunch, either find a nice Kansas City Royals baseball game, or obviously the home of our 2-time back-to-back Super Bowl champion Kansas City Chiefs. Come tailgate at Arrowhead. Everybody should do it.
Yeah.
Whether or not you like Patrick Mahomes and the Chiefs or not, you want to see what tailgating looks like, come to Kansas City.
I love it. Well, and you kind of went into my next question, which is, would you rather go to a Chiefs game or a Royals game?
They are such different experiences that I love them both. I mean, there's the excitement of the Chiefs, and it's that shorter season, but frankly, there's nothing better than sitting at a Royals game in the spring, summertime in Kansas City and watching a game.
Yeah, no kidding, man. All right. One place that you would love to travel to that you've never been to before?
Australia.
Oh, very cool. I love it. And then the best book that you've read in the past 12 months?
I'm going to fail this question. I actually don't like to read books.
Oh, man.
So I haven't read a book. I read a ton of industry, call me boring, a geek, whatever. I'm on LinkedIn and trying to figure out whatever industry knowledge is out there. And I spend all my reading time, my nights, weekends reading those types of things, and not necessarily books. I think I have some ADD when it goes on in terms of reading a book, where I'll be reading it and then my mind is just off and wandering.
Else.
Yep.
why I love asking these questions. You never know what kind of answer you're going to get. So, Justin, you got through the Milemarker Minute. Thanks so much for sharing. I hope sometime in the near future I can come and meet you at Joe's, which is just an incredible experience, and maybe we'll go tailgate at Arrowhead or something. That sounds like a great day in Kansas City to me.
Let's do it. You're welcome anytime. We'd love to have you.
Oh, man, I love it. Everybody, this has been another episode of the Connected Advisor podcast. Thank you so much for tuning in and listening to the insight and knowledge dropped by Justin today about the credit union space, technology, and growth in this industry. Do make sure you click follow or subscribe wherever you're listening to this, and we will see you the next time. Thanks so much.